A large firm on Wall Street just released a document titled "A Recession is Imminent." I'm going to go through the highlights, the most important parts of that 18-page report with you in this video. But first, we're going to take a look into what Donald Trump actually said, because right now, almost every mainstream news company, whatever, is running headlines saying Donald Trump refuses to rule out potential recession risk. What I'd like to do is actually listen to what Donald Trump says and then comment on potentially what he means, and then let's get into the recession risk document. Here's the actual interview from Fox where the interview actually occurred, so we don't have any overlay of another company throwing in their cuts. I want you to know this first portion over here you can watch as well. And at the beginning, about 1 minute in, he does talk about how a tax bill is coming, an incentive bill is coming, and that we want to see lower taxes in America, and that could be a tailwind to the economy. The Wall Street Journal reviewed this video, and they didn't mention anything about those potential tax benefits or anything about the good. They only referred to this last 2.5-ish minute clip. So it's worth mentioning that. It is also worth balancing that, hey, it does take a while to get tax plans through Congress because, as we all know, Congress is frustratingly slow. Let's get into what Trump just said.
What you said, and I want to ask you about Ukraine and the blow up the other day with Zelensky. Let me stay on the economy for a moment because there are rising worries about a slowdown. You've got the Atlanta Federal Reserve saying we're going to have a contraction in the first quarter. Look, I know that you inherited a mess, and you said that the other night.
I've only been here.
But are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
Yeah, a quick interjection. This is where a lot of folks say, all right, you don't bring wealth back to America by taking the stock market out of uncertainty. But that's not what Donald Trump is specifically referring to. In fact, Donald Trump and Lutnick, they argue they're just blind to the stock market, that they don't watch it, that this isn't part of their goal. Instead, part of their goal is rather to try to force companies to come to America and manufacture in America. But as you'll see in the BCA research piece in just a moment, this becomes really complicated because when you issue tariffs, and then in this video, you're going to see Donald Trump threaten even more tariffs. You know, people are looking for Trump to walk back tariffs. He's threatening more tariffs in this video. BCA research says, look, trade isn't black and white. It's not like, hey, okay, you want to buy this little $5 calculator from Canada? Tariff, 20%. It's, even if we make the chip in America, we often send our chips that are made in America to Canada for testing and then back to America. And then, of course, people are like, all right, well, they're tested in America. That's fine. But that's just one tiny example of an intermediate trade. In other words, an item that crosses the border potentially multiple times before it becomes a final product. And to rebuild supply chains that have been built over the last decades under NAFTA and USMCA is very difficult. It doesn't happen overnight. So I know Donald Trump talks about bringing wealth back to America because his protectionist view is we want to bring more jobs to America. The downside, though, with that is that we have built decades worth of infrastructure on free trade, not on tax trade. And so that is what creates problems in the near term. And Donald Trump is acknowledging this. He is like, I'm happy he's not pulling the Lutnick and going, yeah, we're never going to have a recession again. Everybody's got a stock app on their phone. Stock market only goes up. I know that's a thesis that people have out there, but it's also not realistic related to the business cycle. I'd love to say, hey, yeah, no, there's no chance of recession. But I actually think that Donald Trump takes a reasonable answer here because, yeah, the recession risk is real. And you'll see in the BCA research piece in just a moment, it's intense.
But I think it should be great for us. I mean, I think it should be great. It's going to be great ultimately for the farmer. Don't forget, I made the deal with China on the farmers where they had to buy $50 billion worth of product. $50 billion. From 15 to 50.
Did they
and it was
follow
great.
up and do it?
They did it when I was president. What happened is when Biden was president, they didn't buy any longer. Yeah, because there was nobody to call them. I used to call President Xi. I said, you got to do me a favor. You got to live up to that agreement. And he was great. He did.
Before you came into the Oval Office the first time, you were a very successful businessman, very successful.
That's all related to the 2018 tariff war, by the way. That was a great buy the dip opportunity. So I just want to be transparent about that. I covered the 2018 trade wars and what was going on with the Federal Reserve at the time. But remember, 2018 was a period of time where the Federal Reserve was actually also raising interest rates. We were moving up to, 2.5% in quote unquote normalizing interest rates. You got tariff uncertainty. And then at the end of the year, when there was a shock because the market was just pissed and selling off because rates were moving up, we actually had a crisis in the bond market for a moment. Jerome Powell said, we're done raising rates. And you sort of got the Powell put, as we like to say, where Powell kind of saves the day. And you had recovery again in 2019. So that 2018 experience was a great buy the dip opportunity. That said, we also weren't building the levels of recession risks that we're seeing now. We didn't really see recession risks until COVID, and obviously that was quite a unique shock. Let's continue.
Real estate executive, and a lot of people said, oh, this is the business president. This is it. He's watching the stock market. He knows all about, he doesn't want the market to go.
She's purposefully saying that line. He's watching the stock market. When reporters do that, it is a cue to the interviewee to respond to specifically that. But they're smart. Fox is smart. They want Trump to keep coming back because we know that Fox and Trump have friendly relations. So they're trying to softly, please say something about the stock market.
Go down. And now we've got tariffs and the market has been going down.
Well, not much. I mean, in all fairness.
You said, look, we're going to have a disruption, but we're okay with that. Is that what you meant?
I guess it depends which stock you're referring to. Tesla's down 50%.
And the stock market going down was the disruption. What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous...
This, by the way, is a great argument that people like Steve Jobs also took, which was, look, even Warren Buffett takes this mentality. We're not a quarter-to-quarter based company or country, right? We have long-term goals. That's what Donald Trump is trying to convey here. The downside of that is it does mean Donald Trump isn't going to be affected by this sort of Atlanta Fed. Atlanta Fed's super sensitive, okay? Yes, it's bad. We covered all the details of it, but we know it's very, very volatile. You get two good reports, pops right back up. I'm not saying I can predict what's going to happen with that Atlanta Fed reader, but it's a very sensitive barometer. That said, this is a fair argument.
Tremendous foundation for the future. Tremendous foundation. Everything's been taken away. We don't make ships anymore. We don't, you just saw one of the biggest shipbuilders in the world, one of the biggest shipping people in the whole world.
In the Oval Office with you.
In the Oval Office. He's announcing a $20 billion investment in the United States, which he would have never done except for this. But look at this. Honda, Toyota, they're all coming in. You take a look at what's happened. The chip maker, the greatest chipper, Mr. Wei, the biggest in the world by far, is going to spend $200 billion on making a massive plant to make chips.
So that's your message? Build it here?
Build it here. There's no tariff.
Yeah. The public companies want to make sure that we have clarity. After April 2nd, when those reciprocal tariffs go in, is that it? Are you going to change anything after that? Will we have clarity?
You'll have a lot, but we may go up with some tariffs. It depends. We may go
Listen to that again.
Have a lot, but we may go up with some tariffs. It depends. We may go up. I don't think we'll go down, but we may go up.
See, I like this idea of, build it in America if we can do it better. A lot of manufacturing has gotten really good in other parts of the world, and that is why it is difficult for people to say, okay, yeah, we'll do it in America. But they show up in the White House, they say, yeah, I'll do a deal, and they promise this, number, and then, of course, if there's a recession, they won't actually do that number. But they promise a number to get on Trump's good side. Trump can make the PR announcement. They didn't actually spend a dime yet, and then they get favors to, try to make financial sense for them. Fine. But it also has to make sense for us to manufacture certain things in America. We just can't do it all here because things would just become substantially more expensive. The bigger problem here is Donald Trump's comment that they're not going to go down, it might go up. This is him negotiating with the other countries, but the stock market don't want to hear that right now.
But they have plenty of clarity. They just use that. That's like almost a soundbite. They always say that. We want clarity. Look, our country's been ripped off for many decades. For many, many decades. And we're not going to be ripped off anymore.
On the tariffs, what are the automakers going to do for a month? I mean, you say you wanted to help American automakers.
Yeah, I did.
You spoke with the three.
It's a transition period.
Okay.
And it's a transition into April. And after that, I'm not doing this. I mean, I told them, I said, look, I'm going to do it this one time, but after that, I'm not doing it. They called me and they wanted help during this little transition period, and I gave it to them.
Boom. Okay, so not helpful for the stock market today, but that's okay. You know, Donald Trump himself said the goal right now isn't to care about the stock market. Okay, well, I mean, just obviously keep that in mind as an investor. But here are the bigger problems. Let's look at BCA research. All right, I'm just going to give you the TLDR on this, okay? First, recessions often begin when an economy becomes vulnerable to a downturn and then a shock. All right. Something I've talked about on this channel for a very long time is the difference between the 10-year and the 2-year Treasury yield. Those don't, like the spread between those two numbers doesn't skyrocket until you have a shock. When the economy starts slowing down, that's when you are vulnerable to a shock, and that's when things move very, very rapidly. So I want to mention this. Recessions don't come slowly. They hit hard and fast. The market gets hit before you even realize it's come. And by the time the worst is in, everybody's screaming recession, the market's bottomed and you're already recovering. Like, the stock market tends to recover 3 months before the end of a recession. So there's an interesting timing thing here where you are going to have some really incredible buy the dip opportunities. I'll make a video on Redfin being acquired by Rocket Mortgage, but I think it is the wedge deal of the century. This is such a brilliant acquisition. Like, this is the stuff I want to do with House Hack. Like, that is so smart buying Redfin. Because it's like the worst time to run a real estate broker style lending / website. Worst possible time. And we'll talk about that in a different video. Anyway, U.S. is at the greater risk of recession than it was in early 2022. Why? Because people had excess household savings then, they don't today. Job openings were plentiful, they are not today. And you could refinance low. You could get cheap debt. Can you today? No. Okay? Those three things, they say, has basically worn the insulation low on this economy. Consumer confidence is nosediving, job layoffs are up, new home inventories are elevated. All right, in other words, in overbuilt areas, there are a lot of homes, so in overbuilt areas, you might see prices come down. All right, well, we've known this was likely for 2 or 3 years already. Confidence goes up and down. It's a very volatile needle. Job layoffs going up, well, that's a problem. Now, part of this is due to Doge, but they mentioned this fancy thing called the Beveridge curve. I'm not going to explain exactly all the details of this right now, but basically it is at a tipping point. The only thing holding the Beveridge curve up right now, which is anything that changes on the layoff side at this point, pushes up the unemployment rate almost 1 for 1. We're at the tipping point of that curve pushing unemployment straight up. The only thing that's been missing, have been layoffs. 27 weeks unemployed are elevated. You've got a lack of job openings. You've got a lowering of labor quits, which is a sign of market uncertainty. When people are confident about getting a job, they don't quit. They're more likely to quit. When they're nervous about getting a job, they don't quit because they don't want to lose their money, right? They'll hunker down and wait for a bit. This will be a terrible time to quit, unless you had some other crazy source of income, because you're going into a crap job market, right? This is why I said to people taking those layoffs at Doge, I'm like, if you're going to do it, find a job ASAP, because you don't want to be the last person in line trying to get a job somewhere else. Anyway, so this is bad, right? Okay. Now, we don't currently yet have a recession, at least according to the NBER signals. Most people, I see you in the comments, I see the pain, okay? I see it. They're like, we've been in a recession. We're already in a recession. These are at least the metrics for this, whatever. These are like charts. Who cares, okay? But basically, could we turn into a recession? Yeah, absolutely. Are we there right now? According to those numbers and those charts, no. Fine, who cares? It's paper, it's Wall Street. What about this? Oh, this tariff thing is going to be a little disruption. Okay, this is where they talk about the intermediate goods section. I already explained this, about 10 minutes ago in this video, but they talk about the supply side impact of higher tariffs could turn out to be quite large. This is where they say more than half of trade in North America is based on intermediate goods. And here's where they talk about, testing semiconductors in China, or the relations that we have with Mexico, and the haphazard way that we're sort of applying tariffs in, like, are we going to get fewer tariffs or are we going to get more tariffs? That creates a lot of uncertainty for a very delicate economy and in an uncertain time. They also talk about how, because of tariffs, inflation is likely to overshoot slightly in the near term, especially with inflation expectations going up, putting the Fed in a place where the Fed's going to go, yeah, no, we're not doing anything, everything's fine, which is exactly the opposite of what the Fed should be doing, because they're going to stall us into a depression, a deflationary spiral with 20% unemployment and robots taking over the world, making it even damn harder for you to get your job after you lose your life. We don't have to get chill, Kevin. Chill. The higher tariffs will temporarily push up inflation, which keeps the Fed on hold. Okay, what else? Cautionary savings. They argue that $1 of a decline in income is likely to decrease aggregate demand by more than $1. This is basically a way of saying when uncertainty goes up and people are nervous, what happens in the economy is they see sales down a little bit 1 month. And then they're like, okay, well, so let's make an example here. Let's say you're selling lemonade, and your net profit every single month is $2,000. And then the next month, your net profit is $1,500. So you're down $500. You might go out and, spend in restaurants or discretionary spend or whatever, the equivalent of $1,000 less. Even though you only took in $500 less, you're like, oh crap. And that, oh crap, when the economy does that, really, really easy to slip you into a recession. On top of that, financial conditions have not tightened yet, which is actually bad. Now, financial conditions is a tough one. I'm going to explain that in just a moment. But then they talk about curb your enthusiasm, like European stocks are only up because of the pull forward of tariffs. We had a lot of pull forward of front running in the stock market because of Trump coming in, blah, 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 blah. Okay, they recommend selling stocks. Fine, this is BCA research. Financial conditions, okay? This one's a little more complicated. Think of financial conditions as a banker's willingness to lend to you. All right. So let's put this as simply as possible. You run that lemonade stand. Today you go to the bank. You're like, I want a $100,000 loan. Bank's like, no problem. Okay. Now you go into a period of economic tightening, contraction, concern, uncertainty, tariffs, blah, 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 blah. Hey, I want a loan for $100,000. Hell no, we ain't doing loans right now. You gotta be kidding me. We're a bank. You think we do loans? It's like, yeah, that's literally what bankers do. No. Come back to us in a few years. Or, sure, $5,000 loan, right? So it could be the availability of loans, but it could also be the size of lending that gets crushed. So that way, even if interest rates come down, your availability to get credit can collapse. Now, this is actually a personal warning to folks, and what I recommend people do, and this is not personalized financial advice, but generally, if you own a home right now and home values are high in your area, get a home equity line of credit now. Yes, rates are high, but you're not going to spend the money. Don't spend the money yet. Just open the damn line of credit. It costs you like $100 a year. It's not a big deal. But if you open a line of credit for $100,000, let's say, in the equity in your home, and you're not spending any of that money, you have the capacity of writing a check. Okay? If home values come down, you will still have that $100,000 line. Yes, they could freeze lines. These are rare things that could happen. People then often take that money and just put it into a savings account, right? They pay the interest for a little period of time, and then they collect it in savings. But establishing it is very interesting, because if you do go into a crisis, you have something to pull from. Whereas if you are in a crisis, it's very difficult to establish that credit because financial conditions tighten. All right, there you have it. That was a long one. But honestly, I think this was chock full of information, and this should give you some insight into why the stock market's like, man, this sucks. It does suck. But anyway, I'll bring you more updates as they come out. So I'm back in the studio. I'm super happy to be back. I miss y'all. We'll see y'all soon. Bye. Good luck.
not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.